Hello and welcome. This is KYC, a brand new show at NDTV Profit. And in this fast-paced world of stock markets, investors are bombarded with information, but what they often lack is a deep, comprehensive understanding of companies they invest in. Know Your Company is a show designed to give you regular investors powerful, actionable insights into the fundamentals of a single NSE-listed company every single day. And today we're going to talk about a relatively smaller company, that's Waaree Renewable Technologies. Now, in terms of how things have fared and panned out, well, in terms of what the company does, it is an engineering, procurement, construction company for solar power projects. The projects, of course, include ground-mounted solar and rooftop solar, and has about 1.82 gigawatts of projects commissioned, another 3.39 gigawatts of project sites under execution. And well, the company also offers operations and maintenance services as well. Moving in, what we tend to do is we rate all these companies on how things have fared for the very many parameters as far as the company is concerned. So we start by talking about the income statement, the balance sheet, as well as cash flow statements, and also give you an idea of the return ratios. Of course, we'll also give you an order book picture, because that's where we actually get a better idea about the visibility of the company. Moving in, we also talk about return ratios, shareholding, street credentials, as well as street coverage. Pardon me. And as usual, we usually start by talking about the income statement particularly. So let's talk about that. Let's start by how things have fared, in fact, in terms of the past. And if you consider just the first 9 months of this financial year, you see that we've seen an 86% growth in your top line. Your revenues have risen 40%, and your profitability has also risen 44%. But if you consider how things have fared when it comes to your three-year CAGR, we've seen a 37% CAGR when it comes to revenue, EBITDA growing by around 89%, and the net profit is not 315 times, it's 315%. That's the kind of CAGR that you've seen as far as profitability is concerned. So it has gone from strength to strength, as far as Waaree Renewable Technology is concerned. But on that note, let me also get in my colleague Mihika, who's going to give us a better idea and several insights into several of the other factors here as well. Mihika, welcome to the show. Let's talk about the order book and what it means for visibility going in.
Yeah. 2023, we started off with a small set of order book, it was 817 megawatt power. But if you see, in your, over the years, especially, it's grown significantly. Even 2023 versus the starting of FY25, we've seen a strong jump from 817 megawatts to 1,091 megawatts. And even if you look at the picture as of Q3 FY25, well, that's seen a significant amount of growth as well. Right now, Waaree Renewable Technologies has a total of 3,398 megawatts, or 3.3 gigawatt of order book. So it's a thumbs up on, when you look at the order book position, how much it has in terms of visibility, as well as how it's been growing.
Yeah, so significant advances for the order book in terms of visibility too, and the management seems to be very actively positive when it comes to the order book as well. There are a lot of advantages in terms of its balance sheet too. But speaking of which, let's talk about that. So we do have equities shareholder value standing at around 318 odd crores. And the company does not have significant borrowing. In fact, its overall debt is around 35 crores. The company will tell you that, in fact, they do not need any more debt. And the cash balance stands at around 19 crores. In fact, when it comes to working capital, their working capital requirements as well are, next to nothing at all, considering the very strong accruals that the company has. So all these factors are certainly working in favor of the company with respect to, what the outlook could be potentially. So it does have a very clean balance sheet, including working capital, which can otherwise be very, very large, but it does seem like the company is making worth and making for the requirements of working capital. So that's something to keep an eye on, which is why we'll give this one a thumbs up as well. But now that we have spoken about the income statement and balance sheet, along with, of course, with the order book, let's also talk about the return ratios. Mihika, what do you have for us?
Yeah. So 2021 was not a very good picture in terms of your return ratios. We saw negative return ratios. But as you see it progressing till 2024, we've seen a strong jump, whether it's from 2022 to the 2023 timeline. Return on equity has gone from 32% to 96%. ROC, which is return on capital employed, has seen a big jump as well, 3.9% to 48%. In 2024, we have seen return on capital employed become even better. Some normalization in terms of your return on equity, but that's just because of some of the share performance that we've seen towards the latter half of the calendar year 2024. So that's where that's coming in. But overall, it's a good picture. We've seen, levels increase on a year-on-year basis, and so it's a thumbs up on the return ratios. But in terms of cash flow, Agam, how does the net cash flow for the company look?
Yeah, very, very positive. If you consider how things have fared over the last few years, just take the cash flows from operations, and you will see that it has actually grown from strength to strength. So back in FY22, you had about 46 odd crores for cash flow operations. Moving on to 70 crores, and then about 152 crores. Even if you consider on a net basis, nearly 16 odd crores coming in terms of net cash flows after all the investing activity that has been through, and all the financing activities that you've seen coming through. And while there was a very small blip in FY23, FY24 once again looking at very strong numbers. So there is no doubt about the fact that it's on a strong footing when it comes to cash flows as well, and that's very evident in your balance sheet too. With the kind of movements that you are seeing, and they don't need to raise any debt or for that matter equity either in terms of what they have in store. But let's move on and talk about beyond income statements. So as far as this income statement, just in general financial statements are concerned, that would include the income statement, the balance sheet, as well as cash flow operations. It looks like it's on a very, very steady footing. But Mihika, how are you looking at shareholding?
Yeah. So very strong promoter shareholding for Waaree Renewable Technologies. We've seen promoter shareholding be around the 74% range for since the last quarter. We've seen December 74%, September also 74%. Institutional holding in terms of the domestic and foreign institutions, that's on a lower end, barely, not even 1%. But we have strong interest from the retail side. 24% is what we are seeing from the retail side. That has actually increased certain barely any basis points in the quarter from September to December. So it's a thumbs up on your shareholding pattern.
Focus back to, we were talking about Waaree Renewable Technologies, and at the moment, the point that I was trying to make was that a company of the size of about 11,000, 12,000 crores has a relatively small or rather negligible institutional holdings. That's something to keep in mind. But other than that, given the fact that the promoters hold nearly 75%, 74.4 to be precise, in the company, it's certainly a positive. But Mihika, let's talk about perhaps the most important aspect here, and that is street credentials, the kind of returns that the company has shown, as well as how valuation stack up in this case.
So on a 6-month share performance basis, the stock is down. It's under pressure, 43%. But this is a theme that we've been seeing across the renewable space. 1-year share performance, despite the steep correction, is up 73.5%. So that's something when you look at it from a 1-year perspective. And from the 5-year performance, it's 298 times. Now, this is to be noted that back in around 2020, 2021, this was a stock that was below the 10 rupee per share mark, and you can actually see notable upward momentum just at the starting of December 2023. So majority of this 5-year performance gain has been coming from the end of 2023. And lastly, when you talk about valuations, current price to earnings ratio is at 73.44 times. This is much lower than what we saw at the end of FY24, which was 98.94, but it's still higher than the 3-year historical average of 65.5. So in terms of the street cred, we've given Waaree Renewables a neutral, while the long-term performance has been higher. And in under 6 months time frame, it has been under pressure. And even if you look at valuations, while they have moderated to what we saw at the end of FY24, they're still above their historical averages. But lastly, in terms of street coverage and the overall rating, Agam, what's the
Right. So Mika, we don't have street coverage. It's going to be a negative there because while the stock has not just recently listed, it's been around for a while, and yet after the tremendous financials that we've seen for this particular stock, we don't have any coverage when it comes to the street. So that's always going to be a negative impact. But on the whole, if you consider all the parameters, all the things that we actually did want to talk about, it does seem like the company has very strong fundamentals. Strong income statement, order book picture, balance sheet, cash flows, as well as shareholding pattern. All the other factors taken into consideration, it does look like a good one. Street credentials, spectacular returns. The only reason why we're giving it a neutral is because of valuations at which it currently stands at. Street coverage, of course, is a negative, which actually brings our overall score for the company to 6.5 out of 8. So it's certainly a very, very good showing as far as the company is concerned. But let's take this forward. Well, I spoke to, in fact, the management of the company, the CFO specifically, Mr. Panjwani, where we asked him about the outlook beyond just the third quarter. This is what he had to say. Listen in.
First of all, I would like to digress a bit by saying that EPC companies need not be measured on a quarterly basis. EPC companies are morely, if you look at our work profile, they are about like 12 to 15 months, 18 months kind of a work. So quarter on quarter will not be an appropriate measure. If you look at our 9 months performance, we have already done excellently well, going up by 85% in our top line, 42% up in our EBITDA margins, 43% up in our PAT margins, one quarter bit here and there, it doesn't matter, what matters is your order book size, your kind of work that you are doing.
Point taken, sir. So in that case, what can we expect in terms of the entire year? I believe that you've already seen such a strong year in terms of your top line growth, in terms of your margins expansion, as well as profitability. To what extent are you expecting the fourth quarter to come through in terms of your contribution coming ahead? And the reason I'm asking you this is because at least as far as the sector is concerned, seasonally, the fourth quarter tends to be relatively larger as compared to the preceding 3 quarters. Your view here?
Yeah, so you are right. The last quarter need to be good, and we are expecting the next quarter to be better for us in terms of volume size. We have delivered a volume of 319 odd megawatt in our deliverance in Q3. We are expecting about 600 or 500 to 600 megawatt of business in the coming quarter as well. That should take our all-round year growth at the same level that we have been discussing.
Right. Mr. Panjwani, can you tell me about your current order book, where it stands at, and how much are you expecting to execute over the next few quarters? I do have a follow-up question to that, but let's start with this for now, sir.
Please look at the recent order win that we have done. The complexity, the volume increase. Industry highest ever 2 gigawatt order that we have booked. So our current order book stands at 3.4 gigawatt, roughly around 3,700 crore order book, even as we stand today. So that's the volume of the work that's in our hand as of now.
Right. So 3.4 gigawatts worth of order book right now. Any indication as to what this order book could go and climb to in the fourth quarter? And once again, seasonally, if the fourth quarter becomes the one where there's highest amount of awarding activity as well. So what can you tell us about what we can expect in terms of awarding activity in the fourth quarter?
See, this sector is led by a lot of tailwinds. You look at the reports that have come in the last quarter. Solar has delivered 24 gigawatt of installations, and as we go, reaching the target of 280 gigawatt of solar energy and and about 500 gigawatt of renewable energy. A lot of work is coming through. We are now looking at 24 gigawatt of our pipeline. Our pipeline has also increased, and now it stands at 24 gigawatt in our customer chase. So though it's very difficult to pinpoint as to what the coming quarter exactly will look like, because this all becomes how much the customers turn around with us. But definitely the indication of this long pipeline indicates there's a very robust business that's sitting in the sector.
Right, that's the management of Waaree Renewable Technologies telling us about the way forward. But on that note, we have completely run out of time on this edition of KYC. Lots more lined up on the other side. Stay tuned in, and we'll be back in just a bit.